Hello. All right. So I wanted to do a video just now to quickly discuss the price wedge that is forming on the 4-hour and the 1-hour gold charts. Okay. And I want to discuss what this potentially means for price as to whether we're going to break out of this wedge to the upside or break down out of it to the downside. So if you're a beginner gold trader or somebody who's not very used to reading and looking at technical charts, a price wedge, as you can see that I've drawn out here, forms when essentially, buyers and sellers and the market is undecided as to where the momentum is stronger, right? So basically what's happening is price starts coiling because buyers are buying the sellers' positions and the sellers are buying the buyers' positions. And it's kind of like a battle happening to see which momentum is stronger, the buy side pressure or the sell side pressure, right? It's basically just an effect of supply and demand. And what we've also can see with gold price over the last few days or so is that we've really been stuck in this channel between the very strong resistance of 1800, that strong psychological level, and also this support of 1760, which has proven to be very, very strong, as we had held its support here previously in the past multiple times at 1760. So I think the key question obviously is now that we have this technical pattern forming with this price wedge, right? The price wedge is a mixed signal, meaning that um, based on this pattern forming, price could either break out to the upside or break out to the downside. If it breaks out to the upside, what you'll essentially see is some sort of price movement like this, where we break out of the wedge, we maybe make the wedge support, and then start going up further, maybe retesting that 1800, going back down, and then breaking through it, something like that. So typically a break out of this wedge would signal more bullish price action. And the same would be said for the downside. You break down, maybe make the wedge now new resistance, or actually break down all the way past 1760, something like that. But basically, you're kind of getting more downside price action. So we really want to see where price is going to go over the coming hours and potentially the next 1 or 2 days now that we've been stuck in this price wedge. Now, I do have to say that typically when a price wedge forms like this, right after a pretty strong sell-off or vice versa on a pretty strong buy-side momentum in terms of price action, it typically signals more of a continuation of the previous trend. So because we've had downside sell pressure, and now we've formed this kind of flag here in terms of this price wedge, more often than not, from a technical standpoint, it means that we're probably going to see further downside. However, again, this is definitely not 100% guaranteed. And especially with a market that is so sensitive to news, to fundamentals like gold and currencies, we really have to also be aware of what's going on in terms of the macroeconomic world to understand if we may actually see a break up or break down out of this price wedge. Now, obviously, yesterday, the big thing that happened was Powell's speech, and actually, he didn't end up saying that much, right? Um, I think he was as, he danced around the subject as much as possible in terms of interest rates and all these things, although he did say that he would not be, or the Fed is not rushing to raise interest rates. So trying to kind of calm people's fears down a little bit. But overall, he didn't really say much, and it didn't really move the market much, right? But so essentially, we're still kind of in the same position where we really want to see is the economic data that's going to come out over the coming days or potentially today, right? We have new home sales today. If we look at the economic calendar, we have the new home sales to see, okay, basically, is the economy really showing actual data that proves that it's really uh, continuing its recovery, right? At the same time, we also want to see, I know there's no inflation data right now, but is inflation still going to be a huge problem, or is inflation really as transitory as still the Fed kind of claims, right? So potentially one thing that could cause price to break up or down out of this wedge is in fact the data being released later today, right? We also have other various FOMC members speaking today, right? So anything which could suggest that, quicker interest rates hikes, quicker asset tapering could lead to downside sell pressure out of this wedge, and vice versa. If they say something like, oh, we're not trying to raise interest rates anytime soon, we can certainly see potentially a break out, right, to the bull side. Same with the new sales data, right? The new home sales data. If it's bullish for gold, we could potentially, bullish for the dollar, we could potentially see a break out, down out of this price wedge, and vice versa if it's bearish for the dollar, right? So we also want to be paying attention to these kind of macroeconomic data, news, and fundamentals, when also trying to potentially see how we're going to be breaking out of this price wedge. The last thing I'll say for this video, this very quick video, is just that, especially if you're a beginner, you don't really want to try and play the wedge, meaning that you don't want to open a position, let's say at 1781, when we're stuck in the middle of the wedge and there's no real price movement happening, right? Because you don't really know if we're going to be breaking to the upside or breaking to the downside. So what I highly suggest that you do is, more than anything, you wait for either the upside, or sorry, the breakout to the upside, and then get like a confirmation pullback, and then buy that pullback and then continue to ride the momentum upwards. And the same would be said if you're trying to short it, right? Wait for a break down to the downside, buy that as that kind of bounce, right? Buy that bounce once it's confirming the downside movement, and then ride the momentum down. That is what I would highly suggest, and that's how I think is personally the best way to play a technical pattern like a wedge. Um, but that's totally up to you. Not exactly financial advice, but I just think it's a little bit risky to be taking a position just smack in the middle of the wedge. You're not going to make the risk reward is just really not there. You're not going to make as much money as if you really wait to see the direction and then open the position when you get either a pullback or a bounce up. Okay. Anyways, if you have any questions, please feel free to leave a comment, leave a like. See you later.